Prosperity Stock Report delivers you digital insight. Digital insight into what's happening behind the scenes with Canada's most promising publicly traded companies, exciting startups, and the deal makers that keep stock markets flowing. Money. So get ready for our next unscripted interview. Now, here's your host, Derek Ivany.
Welcome back, everybody. Before we get started with the next podcast, I wanted to congratulate everybody that played our FGD. The stock, it ran pretty quick. We saw a nice 92% gain in about a week, I'd say. Lots of volume traded. I guess the most volume it saw in quite a while. We're still up over 80% on it. I am going to try to get the CEO, Andre, on, and if we can get him on the show, we'll touch base on what's going on with the company, why it's exciting, and why I believe it's going to be a pretty exciting fintech play. On today's podcast, though, I connect with Alan Wilson, CEO of Jericho Oil, TSX Venture, JCO. And for those of you across the border in the United States, the ticker is JROOF, JROOF. And it also trades in Germany under ticker JLM. I know I have a lot of guys that listen to the show from Germany, Austria, and Switzerland, and probably even Liechtenstein, because I see a lot of your traffic coming through on the Google Analytics. So I wanted to squeeze in a podcast sooner than later on JCO because I think this thing's going to really rock. So mark my words, and you can stamp my reputation on it right now because right now this stock's cheap. I think it's 66 cents. I've been in it since I think 40, but I'm definitely in for the long haul. I think this is going to be a tremendous story, and I'll tell you one thing, there's not too many penny stocks that you can find out there that have 4 billionaires in the deal. That's right, 4 billionaires own this stock. And if you listen to the podcast, you'll, hopefully we'll get into it with Alan. So, okay, let's get started. Alan, thanks for putting some time aside and joining us today.
I appreciate you taking the time.
No, it's the least I can do. I don't want to let any more time go by because obviously Jericho's on a roll here.
Yeah, things are going well for us, yeah.
Where we left off just before you had your other meeting, you were mentioning you were watching the football game. That was a pretty crazy game, eh?
That was totally crazy. I was hanging around here, and then I thought, you know what? I figured it was getting late. I didn't think we'd do the call, so I went to a buddy's house who lives a few blocks away. And then we were just like, you got to be kidding me. And it was great. It was fun because the first half wasn't that great, to be honest with you. It was okay. But then it got exciting.
Were you going for the Pats?
I don't have a particular allegiance to the team. I actually would have liked to see Atlanta win, being first time and all that. But, give credit where credit is due. I mean, Brady did an awesome job. So,
yeah, Brady's an animal.
Yeah, he's phenomenal.
Those rockets he was throwing were insane. I couldn't believe it. Oh. He makes it look so easy.
He does. I forget he's 39, right? Like, he looks young.
I'm not even really a football fan, but you know what? I was glued to that game. So I think I'm going to have to start watching it now.
There you go. Yeah, I like all sports at that level. The final game. It's pretty good.
Yeah, no, I can hear you, but I'm more of a baseball, basketball guy. That's my thing. But
all right.
I hear that you're a big golfer, though.
I play golf, and I do. Yeah, I play a lot of golf. Well, last 2 years as well in Jericho, I haven't played a lot of golf, but Jeff and I both play golf. Jeff's a very good golfer, if you don't know.
Oh, I know. I hear from quite a few people there, and I'm not a good golfer, so I don't risk trying to play him because I know he'll just embarrass me. Were you also like the president of a golf club or something like that?
Yeah, they just made me president of Marine Drive, where we're both members, which is a humbling honor. You got a lot of members, and it's a pretty well known course. So my wife might question how much extra time I had on my hands with a 6-year-old and a 4-year-old in a public company, but there just comes a time in life when you give back a little bit, and hopefully I can give back a little bit. So. I was actually, when the meeting I was at was to do with the golf course. So.
Oh, nice. Are they boys, girls, combination?
2 boys.
Oh, I actually have an 8-year-old and a 4-year-old, both boys.
Oh, there you go. Yeah, very similar. So when you said child's bedtime the other night, I was very sympathetic. I was like, I got it. No worries.
Yeah, and were you just in Whistler?
We go to Whistler every weekend, January, February, March, because my kids are in ski school. They go on a Sunday, so we go every weekend.
Do you have a place there?
I do. Yeah, I've had it for a while. Honestly, didn't use it for like a decade. And then I introduced the kids into skiing, and it's turned out pretty good. I mean, my parents are Scottish, and you're in Toronto, right?
Yes.
Well, that's where I was born. That's where my parents immigrated. And when my parents moved to Canada, they did not embrace the Canadian culture whatsoever. So I never learned to skate, never learned to ski, never learned to do anything. but I'm trying to give my kids being so close to Whistler, we're so lucky, right? It's an hour and a half away from my office. You got to take advantage of it. Although outside my window right now, it looks like Toronto. We're getting another 10 centimeters tonight. We got like 20 on the ground. It's insane. I moved to Vancouver when I was 12, I think it was, and I've never seen snow like this.
So up until you were 12, you used to live in Toronto?
Yep. Born in North York, went to Eglinton Elementary School, young in Eglinton, and then my parents migrated west, but I was in the banking sector. Quite funny, actually, story is, so my dad moved with a company called First City Trust. And First City Trust is owned by Sam Bellsberg, and Sam Bellsberg just became one of my largest investors, which is quite 30 years later. It's quite funny.
That's
quite
very
ironic.
interesting. I was actually going to ask about that, but since you brought that up, I'll leave that alone for now. So you started in the banking industry. Is that how you got into this business?
No, my dad was in actually, to be truth be told, I left school for a year to work. I worked at a trust company. I learned how if I got all the way up the ladder, how rewarding that would be. So I quickly got my brokerage license, and because they paid for me to do the course, and I ended up working in the public markets. And it was a choice between being a broker and being on the public company side. I was about 22 or 23 years old. Unfortunately, I was 23 and I looked like I was about 12. So I realized no one was going to give me their money as a broker. So I started working for public companies. And 25 years later, that's what I'm doing now.
And what was the first firm that you started working with?
For public company wise, a young venture capitalist. We had at our peak had 60 people with us, but my first public company was a company called Global Teleworks. And actually, it was 93 or 94, and we were the 10th largest volume trading leader that year. So we did okay. It was a good idea. It was on the cusp of technology. I worked for that venture capitalist for 10 years, and then decided that working for a venture capital firm, no slight against the people I was working with, it's just I decided that I didn't like working for 4 or 5 companies at a time, and I wanted to just be solely focused. And since 2002, that's what I've been doing. And right now, Jericho is the only thing I do. 100 and whatever percent focused on it.
Right. So you transitioned from, I guess, tech into oil.
Being at a VC firm, we were across the board. We were in technology, but then 99, the bubble really kind of burst on that. And actually, one of our saving graces was we steered a company that was technology company that I just helped raise 19 million for. And we steered it into natural gas, and it was a bulletin board company. Eventually went to Amex. Stock went from 25 cents to $7 or $8, and it just showed me 2 things. First of all, if you get the right swing in a commodity, which natural gas was at that time, it's a very good place to be. And then, technology versus hydrocarbons, the cash flow is incredible because you're getting cash flow since day one. So ever since that experience, I've been very attracted to oil and gas for that reason.
It's not often you hear of a OTC deal actually making it to the Amex. I remember back in the day, that was always the game plan from the promotional side, but I actually never seen it happen. So kudos to you.
We did it twice. We did one to NASDAQ and one to Amex. And I actually truly believe that as the paths become clear with Jericho, that Jericho will go that path as well. Graduating to a senior exchange is very much a goal of mine. And when we started it, I think that we started with TSX Venture, and I think that was a wise move. I think it's a better regulated exchange than the bulletin board right now. So you naturally could progress to the TSX. But what used to be called the Amex, which is now the NYSE MKT market, is the old Amex. They bought it. Being that we're U.S. focused, that might be where we end up. And I've seen companies dual listed between the venture and there. So it might be a natural progression for us. But that will be the goal this year, to grow to the size where we can make that application.
Right. And you mentioned Sam, but everybody who's listened to any recent interviews know that the Breen Trust is also involved. And
yeah, you just need to look to the insider filings, and Ed Breen, who's the CEO of DuPont, their family, he's the patriarch of the family. His family trust is Jericho's largest shareholder, and they've been a great supporter since day one. They participated in multiple financings. We've been pretty fortunate. We've had other sizable investors as well. Because as much as I believe that my idea in the oil story is a good one, it takes more than just a good idea. You need to be able to raise money, and having a good shareholder base is critically important. And the last round of financing was led by Sam Bellsberg, who at 89 is still a very, very active investor, icon, both from investment and philanthropy. You just need to go to our local university and see the Simon Fraser. You see him and his wife donated the atrium and the entranceway there, and big donators at the Vancouver General Hospital as well. But Sam has had a very good reputation of being a good oil investor, and his timing has been. He's been noted for his timing, so I hope that's him deciding to invest in us at this time is a good omen for us.
Well, it's pretty impressive that you're able to pull that off. There's not too many people that can say they have their own family office. How does that work? How do you get a family office set up? You must have to be pretty substantial to be able to get something like that organized.
Well, yeah, we do partner with a U.S. family office, and we've got family office investors. I mean, being Canadian, it's important to recognize that the family office system in the United States is much different. There's more wealth out there than you realize. When you see families that have made their money wherever and have, groups of 12 and 15 people investing it for them, then you know that you're talking about a different level of wealth. I was lucky enough that I was co-invested with numerous family offices in a venture in California. It was a resource venture, and I eventually became a director of that company. And I think through that directorship, the investors gained some confidence in what I was doing. So when I said that I was going to start my own oil company, I was able to bring a few family offices as my core investors, and it's worked out to be a tremendous advantage over other junior companies to have them behind you.
Is that how you got into contact with these guys? Then you transitioned from your VC background into the resource stuff in California, and then you opened a bunch of doors? Yeah,
more or less. I mean, I think what sets me apart from maybe other, I'd say, venture capitalists, that in my 25 years of being in the space, I've actually never taken a finder's fee. I've only ever been a co-investor. And keep in mind, my level of investment compared to some of my investors like the Breens, they're much wealthier, so their investment's larger. But if I'm investing alongside with them, sometimes if I'm investing $100,000 and they're investing $1 million, that $100,000 might mean more to me. And I felt that through co-investment and really having skin in the game with your fellow investors, it's built trust and it's turned into, I think, some good relationships that have served my company well.
Ryan's father, Ed, he's the chairman of DuPont. I hear that they're doing like one of the biggest mergers in history.
They are. So when I met the Breens, and Ryan actually works in my office as well. He's a tremendous young man in his own stead. He was just retired. It's 2010, and Ed was previously the CEO and chairman of Tyco. And he went in 2002 when Tyco was a mess, and made it a great success and retired with a very hefty pay packet. If you go on Google, you'll see what he got.
Is that when Dennis went to jail?
That was back in 2002 when he went to jail. That's exactly when he took over, and he eventually split it up into 4 companies. I mean, he's still involved in the board level of that company. I believe he's still chairman, but he passed off the CEO-ship in 2010. To quote, he said the word retire, but I don't think he ever meant retire. But when the opportunity to get involved with DuPont came along, and his specialty is sort of mergers and putting companies together and creating full value, I guess he saw the opportunity to merge down DuPont, 2 of the oldest names in the United States. So I think that this is going to be, as the stock's done extremely well under his guidance. I think since he's been involved, it's gone from $6 a share to 70 something. And I think that will be a tremendous notch in his belt and reputation when he's completed that.
Well, the toy industry's on fire. Hasbro announced that the stock surged the most in over 16 years after its big bets on board games. And the reason why I mention that is because I'm actually a big board game collector. Are you into board games by chance?
Yeah, I do enjoy it. But right now, most of my time is spent on airplanes and looking at oil wells. So time is limited.
Well, if you ever have time to play a game of Risk or something like that, give me a shout.
I will. I love that game. I grew up in that game. Awesome. Watch out.
Okay. Well, I better go start practicing. Maybe I'll get Jeff to come play some rounds with me. I wanted to transition into Jericho and talk a little bit about Jericho. I kind of went over a bunch of different things, and I see that, I guess when it started at its infancy, it seemed like you guys were producing about 25 barrels a day, and then you went to 250, tenfold increase. Like, where are you today?
We're sitting at about 400 today, but adding production quite quickly. Through our acquisitions, we picked up quite a few projects from what I call distressed capital structures. And when you encounter distressed capital, I mean, they're just, they're distressed, they lack capital. So invariably, when you get the acquisition, there's some low-hanging fruit. So we were doing, 350 barrels a day in December, our end of it, our portion of the partnership. But we've added collectively about 65 barrels a day in January. And I see opportunities like that within our own. Without doing any more acquisitions, I see the opportunity to increase our production over the next quarter. which is nice. It's a nice little added bonus for our shareholders because we didn't pay for that in the acquisition. And we're talking about very level capital investment to do that. But that doesn't take my eyes off that I still plan to do more acquisitions and I plan to grow. We'll grow organically as best we can and optimize. And should oil recover, we've got hundreds of drill targets that we can do. But that's the whole goal, is that while oil's down and it's in this part of the cycle, is to build up your land bank, optimize your production, and drive towards profitability.
Would you say it's still cheaper to purchase production than it is to drill for it?
Generally speaking, it's, when you get near 55, you're on a cusp. And if you've watched CNBC or BNN recently, you'll see that the drill rigs are picking up. And the question, I guess, you ask is, when you're running an oil company, is do you want to turn on and produce from your best wells when oil is 55 if you believe it's going to 65? So it's a balancing act for the company. There is a point when you start to drill. For us, I think it's closer to 60, although we will do some in and around this area to not only drive towards profitability, but just to prove our thesis of how good our land bank is.
Is it still a plan to get to 1,000 barrels a day, or is it even higher than that now?
No, in the short term. That's just a near-term goal. 1,000. It's funny when you talk about whether sometimes you get these milestone numbers in your head, and what meaning do they really have? Well, at 1,000 barrels a day, it seems that the analysts will start covering you, that you become of a size where the scale interests them. So I think it's a good milestone for us. Now, we collectively operate close to 1,000 barrels a day with our partner right now, but it's important that Jericho has 1,000 barrels a day. And then we'll be looking on to do 5,000 barrels a day. I mean, our goal is to continue to grow, whether it's through acquisition or drilling, and to build a good mid-sized company here.
The most recent leap from 250 to, was it 450 you said now?
Yeah.
How long did that take?
That was one acquisition. The only problem with acquisitions is it's sometimes hard to gauge how long they're going to take. I mean, you always try and budget for extra time, but an acquisition is a 6-month process for us. I don't think there's any way to sort of to think you can do it for much less.
Is that the plan for 2017, to keep on moving forward with some acquisitions?
Yeah, we have a few in the pipeline we've been working on for some time. So I hope that as long as due diligence passes it. Now, we've shown an incredible fortitude in closing. And what I mean is every project that we are the successful bidder on, we've closed. So we've been able to be very good at raising money. Plus, we have a very attractive reserve-based loan that we can draw on. So for us, it's a matter of the asset passing the due diligence and being the right fit for our shareholders. And if it is, we'll close on it.
And that loan you got at really favorable terms. You don't see that kind of credit facility extended to many people at those rates. How did you pull that off?
And that was the thing. At first glance, I thought at our size, it's not the right time to get into debt. I think can be really, really negative for companies, and it's what got a lot of oil companies in trouble. However, like you said, it was very favorable. And because the bank was very familiar with my team, we were able to get 4.25% money. Why is that important? I mean, that's a mortgage rate. So what that really does, it gives validity to your assets, their mortgage quality. And 4.25% with no amortization, no ties to the stock whatsoever, is very good for the shareholders. So as we grow, I plan to use that facility and grow that facility. But always keep in mind, I'll keep the debt to equity ratio more in balance than we've seen during the last cycle.
Is the land position the company has still around 75,000 acres?
Right. Collectively with our partner, we have 75,000 acres and looking to grow that well past 100,000.
And that, to me, sounds like a substantial amount of land. I can only relate to the mining industry because that's what my background is. But, when you get to a certain level in mining, say mid-tier, you're usually taken out. How does that work for the oil business? If you get to X amount of acres, are you all of a sudden a takeover target? Or?
Yeah, I mean, I say that cautiously because, like you said before, you've heard of many companies who say they want to get to from the bulletin board to the junior listing to the big board, but you still have to do it. And I'm a believer that I actually was the CEO of BlackBerry said, he goes, you don't build a company to get bought, but good companies get taken over. With oil, land is everything. And if we view ourselves as the consolidator of land, we're in Oklahoma. Oklahoma was just ranked number 1 in the world for oil investment by the Fraser Institute. And if we continue to grow at the size we do, then yeah, people are going to look at us. And whether it makes more sense to produce oil and make our shareholders money, or see who comes across and looks at us at the right time, we're out here to make our shareholders money. So we'll be open to to looking and working with other companies to get bigger.
I actually received a forward from Adam. By the way, he's doing a fantastic job.
Thank you. He is.
Yeah, he is. He's a great guy. I met him in Toronto, and he's always on the ball with what's happening IR-wise and whatnot. And I read somewhere, or I might have listened to you speaking about being one of the biggest participants in Oklahoma oil. Is that still the case? Or oil and gas?
Well, there's some big players. I mean, Devon's there, Mid-States is there. I would say a lot of the big players are there, but we are getting more headlines than some of our peers because we're one of the few companies that are growing during the downturn. I mean, we've gone from, I think I originally started with 3 people in Oklahoma, and we're now close to 30 people. The local newspaper wrote us up, and my picture is on the front page of their business section, which isn't the Wall Street Journal, but at the same time, when you're liked by your local community, it's very helpful when you're trying to grow. So we're not the largest, but we're one of the fastest growing companies there.
One of the things that I also came across was, and I actually really liked it, you were mentioning, I guess something along the lines that you warn people about companies that have too many scattered assets all around and how that's a risky proposition, whereas Jericho is specifically focused on Oklahoma right now. I know you do have an initial presence in Kansas from the beginning in 2014, but...
That's right. But it's still the same basin. And I say single basin focus. Focus in general is sometimes, I would say, a mistake that junior companies make. And there's attractive opportunities in oil in Colombia. I saw an announcement today. There's in Mexico and Africa. But if you're a junior company, and listen, we've raised $25 million, and we've been able to do that without paying any commissions. And to a junior company, that's a lot of money. However, in the oil industry, $25 million is still, to be honest with you, not that much money. So if you spread yourself too thin, then, I don't think you're going to be able to deliver your shareholders full value. And at the end of the day, from my analysis, companies with a single focus tend to get better valuations. And we're fortunate that we always knew Oklahoma was a good place to be because we knew from a small company we were welcome. But to see it published as number 1 is making our single basin theory really validated. So I think ultimately our shareholders will be rewarded by us focusing on Oklahoma.
And when you say the single basin, does that refer to the Mississippi line that you're focusing on?
And then it's kind of important in our area, but stacked basins, which is basically formations on top of each other, is important. That way, if you drill a well, you say you're going for the Mississippi and uphole, you get some other well. It just makes it more economical. So there's more than one sand play, oil-bearing sands in our area. There's the Woodford, the Hunt, there's the Mississippi. There's a dozen or so. But they're all geographically the same. So the single basin, I would say, is the mid-continent because they run through the mid-continent. The mid-continent being sort of your Texas, Oklahoma, Kansas, but then refining our focus just down to Oklahoma because there's definitely some economies with working just in that area.
Forgive me for not being a petroleum engineer, and probably most of my audience aren't either. But does that mean your strategy, if we were to try to put like a visual perception on this, it's when you're drilling, it's like drilling through a bunch of pockets. You're trying to hit as many as you can.
That's exactly it, and you're talking to the right person because I'm not a petroleum engineer either. I'm a finance guy, and as CEO, structure and financing the company has been my role. But I've surrounded myself with tremendously good engineers, and I warned investors because you come across engineers or geologists or whoever with lots of letters behind their name. My experience has taught me that people, despite your letters, it's better to have local experience. And one of my reserve engineers previously worked for Devon, and they happen to be the largest producer in the mid-continent, and their specialty is the Mississippi lime. Another, my head of engineering is from Natal & Gussman, another large firm. And so I've focused around there, and they've taught me that these stacked plays, how important they are into the economics of making wells and making money for ultimately your shareholders. Because we all now, in recent memory, it's been a long time since we've seen a bear market in oil. Since early 2000, it'd run the gamut. It had gone not straight up, but pretty close to straight up. The only blip was in 08, and that was a world thing, not an oil thing. So to understand that when times are tough, you got your economics are extremely important. I mean, our goal is to produce oil at the wellhead for less than $20 a barrel. And even though oil is 53 right now, we all saw when it hit 28, people were calling for 10. So being very focused on economics is important. And these stacked plays, like you said, these layers that you drill through, very, very important.
I can definitely appreciate your finance background and the way that you look at things, because as the editor of my newsletter, Prosperity Stock Report, and being up 80% right now, I can look back and say that there aren't too many deals that have been run by the actual engineers that have done well. Maybe an exception to somebody like Paul Matysik or Ron Nedlitsky, but most of the scientists, they're not good business people. So
no, and you mentioned the statistics of the world, isn't it? You are talking about the cream of the crop, and they're good people to invest with, and that's why you're getting such a good returns plan. Congratulations.
100%. And in fact, I'll be interviewing Dan tomorrow from 901. And
oh, great.
Do you know Dan?
Nope, just by reputation.
Dan is one of the coolest guys you'll ever meet. If you ever get a chance to meet him, I definitely recommend it. And hopefully you get to tune into the podcast with him. One of the other things that I really like that you said in one of the past interviews, I don't know if it was with Gold Stock Trades or perhaps it was an interview with a German group. You mentioned how Jericho is like a once-in-a-lifetime opportunity in terms of its acquisition strategy with, buying things that are kind of depressed or cheap in price. Would you compare that to how the U.S. market kind of pulled back in the big real estate crisis and how all the sharks went in and bought stuff real cheap, and all of a sudden, here we are, 2017, and things have quadrupled since then?
It's a great comparison. I only learned of one little difference. I mean, right now, basically anything that went down in 2008, if you had bought it, you look pretty smart today and be a little bit wealthier. Oil, I think, is a cyclical business going through a similar cycle. It was a supply-demand reason. There was a reason for it. The only difference with, I've heard this expression used for bubbles. They say bubbles, there's two qualities that always come with a bubble, is that they always burst and they always last longer than you think. I think on the downside, there's a little bit of truth to that as well, that I think the cycle went down a little bit longer, a little bit lower than people thought. But that ultimately is what will correct it, because as oil's gone down, and we've seen this on CNBC, we've seen it in every headline in the world, that in reinvestment in oil companies are, cutting their capital projects, trying to protect their dividend. And from my viewpoint, from a more macro sort of perspective, is that, all oil companies have one thing in common, that if they're not exploring, every time they produce a barrel of oil, they have one less barrel of oil to sell. They need to reinvest in their inventories so they can continue to sell it. And the last 2 years has been very little reinvestment. So what that ultimately means is supply will shrink. The question is how long. And for us, the longer it stays lower, the more opportunity there is to buy. And if it rebounds, we're in a great position to capitalize on it. So we did get lucky. We really hit the sweet spot. That's the one thing. You talked about golf at the beginning when we were speaking personally there, but I use an expression, better to be lucky than good. And, we structured the company well. We've got good shareholders. We've had a tremendous team. We've put good people behind it. But to get in the cycle where we're at and build an oil company while oil is at its cheapest, we really got fortunate there. And now it's our job just to take advantage of that good fortune. But the '08 comparison is a really good one.
I appreciate that response. And I have actually experienced this firsthand back in the times when everything crashed and everybody was losing their shirt. I was invested in a company and they actually had to continue producing at a substantial loss because actually more money to shut it all off. Those type of scenarios is what has come to the plate and created opportunities for Jericho. I appreciate your sentiment there. The other day I was interviewing a good friend of mine, James Anderson from New Legacy Gold. And I asked him, obviously, about Trump and how that plays a role for gold. How do you feel Trump, and maybe more importantly, his appointment of Rex Tillerson being an Exxon guy and now a Secretary of State, how do you think that will work out for the oil market?
Well, I think even more importantly is a fellow by the name of Scott Pruitt, who is the former Attorney General for Oklahoma, who sued the Environmental Protection Agency half a dozen times over his tenure as the Attorney General. He sued the EPA, and Donald Trump has just nominated him to be head of the EPA. Without getting political, it's a very good time to be an American oil producer. All that we've seen so far from from President Trump has been, it works in our favor. They're promoting jobs, they're pro hydrocarbons, and they're pro America's energy independence. So you couldn't ask for a better situation for Jericho.
The future plans, is it always to be native to Oklahoma, or would you actually look at other places? I know that I also listened to another interview at one point where your mandate was as long as you can drive to it.
Yeah. When I started the company, I said I got to be able to get in my car and drive to it. So I had to be onshore and domestic, being on North America. This company's paved its fortune in the mid-continent. I see us sticking there. Texas, the number 2 ranked place to do business. Obviously, it's the number 1 producer of oil in the United States. The Eagle Ford and Niobrara basins have been tremendously rewarding to their shareholders, but in Oklahoma has its own with the scoop and the stack. And I think you'll see us very regionally focused. Although I think as CEO, you have to have an open mind towards opportunity. And if the right opportunity presents itself and it's going to be good for the shareholders, then we have to look at it. I'm a shareholder as well. This last little private placement we did it when Sam came in, as I told Sam, I'll invest alongside you. I can't invest the same size, but I think it's important that everyone in our company is skin in the game. So when I say I treat the treasury like it's our own money, my own money, it is, because I just invested alongside them. So we're looking for opportunities in the mid-continent.
And it's all about buying cash flow.
Right now, there's a good parallel in sort of real estate, and that's why Sam's a big real estate investor. My first investor is an Asian real estate investor, and if you think of an oil field as an old condo building, and what you can do is you buy it. It's got cash flow. So with that cash flow, you can maintain it, can maintain ownership. And then when the markets turn, in the case of real estate, you might renovate it, you might upgrade it, you might sell office condos, you might tear it down and develop it. Same with an oil patch. You use the existing production to maintain it. You hold the land by production, and then when the market turns, you have the opportunity to develop however you want. You have optionality, and optionality is what we've been trying to drive for the shareholders as well. So real estate is an interesting parallel to the oil business with our strategy.
Right now, what would you say the average cost per barrel is for Jericho? In
operating, it's we got a reserve report that's going to be coming out around the end of Q1, beginning of Q2. It won't be hard to guess it's going to be better because we've made an acquisition since our last one, and oil's up 25-30% since then. But so you'll see in that our OPEX should be $20 or below at the barrel. So we intend to, and we generally have been successful. We've been as low as 15, but 20 is the target. In terms of purchasing barrels, the other metric people use is per flowing barrel, what you pay for it. And we've sort of bought anywhere from as low as $12,000 to as high as $30,000 per flowing barrel. But to me, the more important metric is what you can produce it for. And we still continue to model at $40 because although we're not bearish, we want to be conservative. We want to underpromise and overdeliver. So that's why that $20 price is kind of important to us.
That's how I try to live my life with the ladies.
Good plan.
The reserve report, Q1, Q2, when is that?
Due by April 30th. That's when we filed it last year. I will tell you that we did an acquisition on December 31st last year. That made preparing the reserve report challenging. We had a way better understanding of our assets, so we've actually already completed our side of it. But in order to produce a reserve report, it goes in conjunction with your audit. So the timing is a little bit up to the third parties because the reserve report is ultimately vetted and produced by a third party as well as your audit. So it's going to be sometime between March 15th and April 30th, but I wouldn't expect it to go to the deadline.
Right. And Jericho's been performing quite well recently. I know the whole perception back in the day, it wasn't a sexy story. It was hard to promote, but it seems like to me, the guys you have in here, the reserve report coming up, also the fact that you've executed on everything you said. If I go back from historical interviews to where we are today, there definitely seems like there's a lot of stuff to look forward to. And I know that's why some of us hang on to these milestones of, say, 1,000 barrels or whatnot. And obviously you have higher hopes than that. Are there any other elements that I'm missing or we should really look forward to?
Yeah, I think one thing worth noting is when junior companies, and that's not exclusive to Jericho, but when they move, they often do like we've just done. We've just moved from sort of 45 to 65 and pretty quick. And for about 5 or 6 months there, you could buy us at 45 cents all day long. I think the key is that if you believe the company is positioned for growth, you need to own it before that move. And it's impossible to predict when that move is. And all it took was a big buyer to start moving it. And you've seen that. If you couple that with some news, I think that there's still more upside for the shareholders. In 2 weeks from now, we've got the biggest oil conference of the year coming up, which is for your mining investors. You've heard of the PDAC in Toronto. NAPE, which is North American Petroleum Producers, has a show in Houston around the 17th, 18th of February. If you've been to PDAC, you know it's a big show. NAPE, I believe, is actually bigger, and it's not really a retail show, but it's a tremendous opportunity for getting deals done. We've had some success there in the last couple of NAPEs, and our calendar is extremely full for the next, for the week around that show, and I hope that leads to another couple of acquisitions for us.
Is that how George Bush Jr. got started in the business?
I know that, listen, you talk about most American icons. It's funny when you go to the United States, and I'm Canadian, so we understand a variety of things. But when you talk about oil and you talk about real estate, these are two investment fundamentals that the American public understands. This is why also making me think of eventually, when we do get the senior listing, which I believe, we will accomplish, and we're certainly on track to do so, a U.S. listing might make a lot of sense for us because it's just such a well understood story. So lots of icons in the United States have made their fortunes in oil.
So the JROOF is going to be on fire then?
Yep. You say that's the expression. The roof is on fire. Yes, we may be singing that song hopefully this year. That's my job, is to drive us there.
And just so people know, the U.S. symbol is JROOF, JROOF.
We're trading there more right now. We traded not today, but yesterday. Last week we were more volume there, so it's pretty balanced. We're starting to get really good publicity and notoriety in the United States, which is great. It's the biggest capital market in the world.
Well, I'm starting to see Jericho everywhere, so obviously you guys are doing something well. Again, kudos to Adam, because he's definitely on the ball, sharing everything with everybody. And
well, Adam was there before our first day of trading. I consider him a founder. He's invested alongside. You'll find that all of our employees have invested in either the public market or private placements because we all believe in what we're doing. Adam's a tremendous asset for the company,
and he's a great person. And I would definitely recommend, if anybody wants to learn more, to call the company and speak to him, because he's definitely educated me a lot of with all these different things, and hence why I seem to know all of your quotes that you've made over the last 3 years. In finishing up, what would be your final comments to a potential investor who may be looking at a small cap investment like Jericho?
I think if I was finishing on a point, the most important point is when you're investing in juniors, we all know that juniors are risky. None of us invest in a junior hoping to make 4 or 5% a year. We're hoping for better returns than that. And I think that Jericho ticks all the boxes you need. It's in a good industry. It's in an industry coming up of what I think is a bottom, or at least very close to the bottom. And we have this extra thing that other juniors would love to have, and that is a family office partner and tremendous shareholders. And I think you'll see that when our shareholders start to go to work for us, it expands the upward limits where you can see us go. We can get into deals that other juniors may not be able to. We've shown a tremendous resiliency to finance them, and you're going to see more of that to come. You look at the Ed Breens, the Sam Bellsbergs, who are buying 3 million shares a pop or 4 million shares in a placement. They know when you only trade 40 or 50,000 shares a day that they need the company to be really successful for them in order to exit. And I think investing alongside those people who have continued history of success is not a bad way to go. So we feel fortunate to have them here at Jericho, and hopefully through this podcast we pick up a few more shareholders.
The rich get richer, and you got to be pretty damn rich to have a family trust. So I hope so too. And Alan, I'd like to thank you for your time.
Well, I appreciate you taking time. Let me tell the story. I was very, very passionate about it. And, as I said, I founded this company in 2010, went public in 2012. And then I'd say in about a year or so here, we'll probably be an overnight success, is the expression, because it does happen quickly for you when you're in the right, if I'm correct, and alongside other investors, that oil turns and we see $60 or $65 oil again. If you believe that, you need to be building your company now while the prices are down. You can't start building it at those prices. It gets very expensive to get in the business. So I think that our hard work will be rewarded alongside our shareholders. So thanks very much for letting me have the opportunity to tell the story.
Thanks, Alan.
Thanks for tuning in. To learn more about Jericho Oil, please visit Jericho on the web at www.jerichooil.com, where you can subscribe to their mailing list for timely updates on this very exciting opportunity. On our next show, we interview Dan Blundall, CEO of Nano One Materials Corp, TSX Venture NNO. If you are into the future of energy storage and technology, you will want to tune in.